guys, it's Stephen Edwards, the director of CTA Profit First Accountants. So I am doing a topic as part of the Profit First Club today, where I'm going to help you as a business owner understand your own numbers. I am going to focus on Xero. I've touched upon Xero and understanding your numbers in previous sessions, but I do want to take a deeper dive specifically into probably the main area I feel you should be aware of, or the main area you should focus on as an owner. So when we work with people on a one-to-one basis, some of you might be watching this and you'll be quite familiar with what I'm about to talk about. There might be a nice refresher for the people we do work one-to-one with on Profit First. It's not just about Profit First. We've created the Profit First Club, and the foundation is certainly Profit First itself. The book is an amazing concept, an amazing system, and it generally does transform your business and your mindset around money. It does simplify things, which is, one of our core values is KISS, keep it simple, stupid. And Profit First really simplifies your finances because it gives you a structure and a system. It gives you that peace of mind. However, it's just one part of really the what I believe are the three main things when it comes to finances you should pay attention to. So Profit First is all about the cash management from a financial perspective. It's ultimately the bigger picture is about increasing the profit in your business, giving you a sustainable business, making it more resilient because, we're going through tough times at the moment in the economy and pretty much around the world. Being more profitable helps you because it means you're more likely to have that war chest, that profit fund. And when I say that war chest, it depends on your numbers in your business. That could be a few £1,000s, it could be a few £100, it could be £100,000, but you're more likely with Profit First to have this kind of buffer and be more resilient by being profitable. But it's mainly about cash management from a financial perspective. Then we've got forecasting, which I have covered in a previous video. I think it might have been January, December. You can get that from our YouTube channel, but give us a shout if you haven't got access to that video. Forecasting, we do go on to Xero. And when I say forecasting, sometimes the term forecasting and budgeting gets used interchangeably. Forecasting is a little bit more specifically what are you expecting to happen. Budgeting is more about what would you like to happen. And the thing is, I will use the words interchangeably myself because as a business owner, we don't want to overcomplicate things. We don't want to, muddy the waters with just terms. Basically, it's looking forward. It's projecting forward. A budget is probably a better term, but it's just a plan, a financial plan moving forward. And we've covered that in a previous session. And that's what do I expect my sales to be for the next quarter, the quarter after, and so on. And the power with that is you've got something to check against in the future. So if it doesn't go to plan, it gives you a mechanism to ask the right questions. And that's one of the dangers if you're looking at your own numbers or you're not looking at your own numbers is no one's asking those questions. So hopefully that can just help create a mechanism, an accountability system to ask better questions. So just as a recap, Profit First is, from this perspective, more about cash management. Budgeting is looking forward. What are we doing now? We're going to analyze your financial performance in your profit and loss account. So you might have heard the term profit and loss before. You might not know what it means. You might know what it means. I'm going to assume you don't necessarily know what it means. In America, they call it the income statement. In some other countries, they call it the income statement. Your profit and loss is basically your ins and your outs for the business, just to say how much profit you made in accounting terms. Is that sort of simple. There are some confusing bits which I will talk about later on. I won't throw those at you straight away. There's a few things to bear in mind when it comes to cash and non-cash expenses, and some things are not tax deductible, so they might not always show on your profit and loss. So today I'm going to dive into your profit and loss. I am going to do this on Xero. If you are not on Xero, don't worry. The principle is the same. The buttons I click on will be a bit different. So if I'm clicking on, in a minute, I'm going to click on accounting and I'm going to go to profit and loss. If you're using QuickBooks, it will be some different buttons you need to click on. If you use Free Agent, Sage, but the concept is the same. The software doesn't necessarily matter. It's the principle but behind it, what we're trying to do. So I'm not going to delve into this opening screen on Xero. And by the way, including a lot of our clients don't necessarily pay attention to their own Xero. That's not a problem in itself. However, not paying attention to your numbers is a problem. So if you don't like, I was speaking to someone yesterday and they don't have a laptop because their industry means they don't need a laptop in terms of what they do for a living. A bit like a tradesman. They're not a tradesman, but they don't necessarily need a laptop. So some people might do a lot of things on their phone, and this way of accessing Xero is not suited towards a phone. It's more suited towards a laptop or a Chromebook. Actually, I recommended someone yesterday, works quite well. If you haven't got a laptop and you're looking to get something in addition to your phone. So, but the point I make there is you might not have easy access to Xero. If that's the case, speak to your accountant, speak to us. You're probably more likely to be one of our clients. Have a chat with us and let us help you understand the numbers. It's just about asking the right questions, really. So what I'm going to do is I'm going to walk you through what I would do. Not quite a role play because I'm not really a good actor, but similar to what I would do with a client when we look at their profit and loss account on a one-to-one basis. And this is a demo account, so bear in mind there might be certain numbers which are not 100% accurate or likely in real life, but I have tweaked them to create a little bit of a story, and the numbers are all about that story. So let's dive in. And so, as I said, it doesn't matter if you're not using Xero. You don't have to do this yourself, but I want to show you the principle and the power of analyzing your numbers. But on Xero, what you do is you go to accounting, and then you go to profit and loss. And this could be a piece of paper. If you're not a computer sort of person, you could get those reports printed out, get them in front of you, and you can look at them that way if that's what works better for you. I mean, it's obviously a lot easier if you do it with someone else because it creates that conversation. So, right, what I'm going to do is I'm going to go through this live as if you watching this, you're working me one-to-one as a client. As I said, some of you might be doing that already, so you're kind of used to these conversations. But it might just give you a little bit more meat on the bones. If you're completely new to this, I think it'd be interesting for you to look at your own business from a numbers perspective, not just what's going in the bank and what's happening week to week, because we kind of get dragged into the weeds a lot of the time in our business. So what we've got at the top is we've got some date filters. So the first thing I would tend to do, the bookkeeping needs to be up to date. So it is probably a little bit ambitious to expect most bookkeeping systems to be up to date to the end of April by the 2nd of May. That is probably a little bit ambitious. So if, let's say we were mid-April, I would be looking at March. Or if we're mid-May, I would be looking at April. Thankfully, I have got some numbers so we can look at April in this example. So I'm going to change that to 1st of April 24 to the end of April 24. And by the way, in terms of how we work with people with the profit first side of things, this is part of what we do. We look at the numbers with you on a regular basis. We have these regular conversations. We don't just leave it to the end of the year to kind of understand what's going on. So it just means that you're on top of the numbers every month, every quarter, and ultimately it's about making better decisions. So the person I was speaking to yesterday, we've made some huge distinctions on his business that can completely change his strategy with his staff in the next year or so. So that's the idea behind this. It's not just looking at the numbers for the sake of looking at the numbers. So here's April. So if we look at April in isolation, so what we can do is we can export this, we can put it into a PDF, we can put it into a spreadsheet, we can send it to Google Sheets and it opens instantly. We might do a little bit of that in a second. So in isolation, this business, I'm going to say it's a service business. As I said, it's a demo company, but I've done some tweaks and I'm taking the view that this is a service-based business. So it's not a business that's generally buying and selling stock. It's not an e-commerce business. It's not an online type of business. It's more of a people service, not necessarily professional, but it's a one-to-one type service business. Could be consulting, could be professional services. Okay, so they've got a decent sized revenue. They've got £26,479,000 worth of revenue. They've not got that much cost of sales. So really, quite simply, you've got your sales and everything else are expenses. So when you're looking at this page, if we had to really, kind of summarize, we've got sales top line. When people say, that's increases my top line, that's what they're talking about. When people say that it increases my bottom line, it's literally that bottom line of the P&L. So that's the expression top line and bottom line. And so, but really, there's two things on this page. There's income, which is your sales or your turnover, income, revenue, all the same kind of stuff. Again, used interchangeably. There's not really any major differences between those terms. So sales, revenue, and income. And we then got expenses. Everything else is expenses. So don't worry that it says cost of sales. It says administration costs. It says gross profit. It says total administration costs. What else have we got at the bottom? We've got operating profit. We've got profit and ordering activities, profit after taxation. Do not worry about those terms. Honestly, do not worry about those specific phrases. Quite simply, we've got sales, 26479, and everything else on this page is an expense. Okay, so that's quite simple. So if you were to take that top line 26479 and add up all these expenses in blue, you'll get to that bottom figure, which is 11,55689. So on the face of it, that is a profit this business is making. This is a really nice profit for April for this particular business. And we can start drilling into things. So what I'm going to do, I like to zoom in and out. And when I say zoom in and out, I like to zoom in on the specific time period we're looking at. So we are looking at April 24 for this business. I then like to zoom out and look at often the quarter. So the quarter from February, March, April will give us a wider view. We're starting to zoom out a little bit to see, okay, so this is what April looks like, but what does the quarter look like? Because we could have had a crappy March, a crappy February, or actually April might not be very good compared to those months. We don't know, so we'll look at that in a second. And then I like to zoom out again, and I like to compare your quarters to the last so many quarters before that. So we won't just look at February to April. We look at all the previous quarters. Generally, you want at least a year's worth of quarters. This is a demo company, so unfortunately, it doesn't go back for several years. But when I'm working or the team's working, one of the client managers, often Rich, when we're working with business owners to look at the numbers, we want to zoom out for probably 2 years worth of quarters because that tells us a really big story. Sometimes I even look at 4 years worth of information because we can see the COVID effect. We can see what happened pre-COVID. We can see what's happened since. But we start with the current month. We want it to be completely up to date. We want to be relevant. So if you're looking at your numbers, this is the benefit of having online bookkeeping and having up-to-date numbers. As I said, it might not quite be a few days ago. It might be that you got to wait till a couple of weeks into the month to look at your numbers, which is fine. So if we start looking at this, we can see we've got direct salaries. Just to give you a little bit of that, there's probably one more major distinction to make. So as I said, we've got income and we've got expenses. The biggest distinction to make next is it a general administration cost or often just an overhead, we would call that? Or is it a cost of sale? And this is what gets a little bit grey, so don't worry if I do lose you slightly with this concept, but I will paint a really obvious example just to illustrate this point. So if you are an Amazon seller, if you are buying stock and selling stock, your sales will be you're selling your stock, selling your stuff on Amazon and your own store. Your cost of sales would be buying that stock. So when you buy that stock from probably China, wherever it is nowadays, your cost of sales will be the physical cost to buy that stock to resell to other people. So if you're quite simply, if you're buying if you've had £10,000 worth of sales and it cost you £6,000 to buy that stock, then your gross profit is £4,000 and your cost of sales is £6,000. Hopefully that makes sense. So that's a really clear, obvious example. You're buying something, you're selling something, and what we do is we say, how much did you sell it for? How much did you buy it for? What's left is what we call your gross profit. Ultimately, it's all an expense. The bigger picture is it doesn't matter too much, because whether we call it a cost of sale, whether we call it an administration cost or an overhead, it comes to the same number at the bottom. The reason it's important is we want to know how profitable your business is. Are you in the right business before we account for your overheads? Because quite clearly, it's better to have a business where, if you're selling 10 grand, it costs you £3,000 to get to sell that 10 grand, as opposed to it's costing you £6,000, because it's going to cost you 60% if it's £6,000. It's going to cost you 30% if it's £3,000. So, I'm not suggesting, by the way, anyone switches their business. If you're worried about, what's mine? And by the way, if you are a service business, this won't make sense to you right now, but I will explain in a second. But I'm not suggesting anyone switches business, and there are some exceptions as well. So some people might be playing a numbers game. So think of the Walmart strategy in America. Think of the Lidl, the Audis. Certainly Amazon is one of those now. So if you're an Amazon seller, it's generally about the scale. You might actually only be making 10, 20% or something along those lines when you account for the shipping costs and actually what it costs to pay Amazon to fulfill that for you, or to pay them commission on the sale. So you might only keep 10p in the pound, but if you're selling millions of pounds worth of stuff, it's still probably a profitable business. However, a higher gross profit is better. Right, so what I'm going to add into this now is, let's keep the example of you're an Amazon seller. So it might be that your stock cost you £6,000, you sold it for 10. However, you've let's pretend that you don't just sell the stock, you add something to it. Let's pretend that there's a process to make the item better. So you're taking it and you're doing something, you're packaging it up and you're turning it into a better product, and you've got to pay staff to do that. And if the staff are costing you £2,000, we would add that £2,000 onto the cost of the stock. So it's no longer costing you 6; it's costing you 6 plus the 2 for your staff. It's costing you 8. So your gross profit is now £2,000. Hopefully that makes sense. So what I'm saying is, your staff costs can be relevant in terms of a cost of sale for you. So another example is if you're a professional service business, or let's say you're a barbershop, you're a hairdresser, or you're a hairdresser or barbershop. Your direct salaries that I've got here in cost of sales will be a cost of sale, because you cannot deliver that service without paying the team. So we would generally put that as a cost of sale, a direct salary, a direct cost. I would do the same in my business. Obviously, I run an accounting business. My team deliver the service. I do make a distinction, and some of you might want to make this in your own business. I've got staff that deliver the product. So I've got staff that do accounts, they do bookkeeping, they do the profit first coaching and work, they do payroll, VAT returns, or whatever it is. Those staff I would include under cost of sales. So I would include them as a direct salary, because they are contributing specifically to that service. I've got some staff that are support staff. They pick up the phone, they do internal admin, they might do some marketing. I've got a personal strategic assistant who helps me with things in the business. That's not a customer. It's not actually specifically to charge a customer. We're not doing work specifically for that customer. So those salaries I would include under administrative costs, administration costs, or overheads, a bit easier to say. I would include them down here. So it won't be a cost of sale. So hopefully that makes sense. I know I spent a lot of time talking about this, but this is probably the most important thing if you've got a team or you're buying and selling stock. Either way, you've got a team or you're buying and selling stock is super important. It can also be important if you have a service-based business and you work for yourself, because actually what you could do is you could put in a notional salary. What would it cost somebody else to do the work I'm doing if I'm the one delivering that service? So when it was just me, when it was just Stephen Edwards on his own, which is a few years ago now, doing the accounting, doing the bookkeeping, even answering the phone. What I could have done, I didn't at the time. I could have put a notional salary through it's not a real cash figure, but it's useful to know how much would it cost me to pay someone else to do my job. And that's really interesting because that helps you understand how profitable your business is in terms of your gross profit, because ultimately we want to track this gross profit. We want to see that trend go up. We don't want to see that trend go down. So I mentioned a higher gross profit percentage. It's better to keep £5,000 out of the 10, as opposed to keep 3 out of the 10, because that would give you a 50% gross profit percentage instead of a 30% gross profit percentage. However, you are in the industry you're in. And there are some industry averages, by the way. So in accounting, we do have percentages we work with. So what you want to do is you just want to be a better version of yourself. I'm not suggesting people flip industries. There has been a really rare example where someone changed their model based off these conversations. They just weren't happy with their numbers and they just realized it was a lost cause, the model, the financial model they had. So what we're kind of doing when we look at your numbers is we can kind of reinvent our business on paper. We can play that game of what if our percentages were this? What if our staff was this amount? And also not just how could we possibly do that? It might be impossible, but it's an interesting perspective. However, the main focus is to be a better version of what you are now. So if you're making a 40% gross profit here, how can we get it to 42? How can we get it to 44? And it's Ineos who overseeing the Sky cycling team. And I talk about that because I'm a Manchester United supporter, and David Beresford is now involved in the Man United setup. So Jim Ratcliffe has appointed him. They talk about incremental marginal gains. How can you constantly make those small gains? And if you're constantly paying attention to your gross profit percentage and your cost of sales is going in the right way, it can transform your business over a period of time. I'll be honest, I'm a business owner. I'm not perfect. I have challenges. I have problems. I've grown. I've learned from mistakes. A few years ago, our staff cost was a bit high, and I didn't pay attention to my gross profit here percentage. I didn't simply see how much the staff were costing me. I just put it all in the name of growth, which we do, and that's what Profit First talks a lot to. Is we're like, oh, revenue. No, actually, it's not revenue. It's how can we squeeze more juice out of the lemon? How can we be more profitable? How can we be more resilient? And all of this helps with that. So hopefully that's useful. You've got something to take away from your gross profit, which is, I think, one of the most important things to look at. Then we've got your general overheads, and it's a little bit easier because they're just overheads, and you might actually have salaries as well. So I've purposely picked an example where we've got direct salaries. So in this business, we're going to say it's a service business, and the salaries, they are, let's pretend they're some kind of consultants. They are delivering with probably the owner, because it's probably unlikely, unless you're a really niche business, premium business, you're going to deliver 26k of revenue with a 5k salary. The fact is, the owner and most of you watching this are working in your business as well. So I mentioned you could put a notional salary down for yourself. Obviously it's what you pay yourself is a bit different, because if you're a limited company, we know that you've probably got a low salary and you've got a dividend. And actually what you pay yourself is nothing to do with the commercial worth of it. It's just kind of what you can afford to pay yourself, what's left. So we, in this business, actually, if the owner in this business was doing it, let's pretend it would cost the owner £60,000 a year to hire to replace them in the job they're doing. And that's an interesting question. How much would it cost to replace you? Take that off your numbers. Have you got anything left? That's whether you're making a true profit. We would add that extra £5,000 a month, £60,000 a year salary onto cost of sales. And actually, it would be 11,300. But I don't want to kind of confuse things too much. Just something to bear in mind. What does the owner do in the business can be a part of this when we're really sort of analysing it, see what's going on. So then we've got expenses. We've got obviously advertising is the biggest expense here. We've got some rent and so on, but we have got a profit. You can see there's no director salary and things like that. They've probably paid themselves, but it's not shown on here. It's probably shown differently because dividends won't typically show on your profit and loss. Some people's Xero on QuickBooks will show dividends. It's not really the place to show it because it's not a cost, and we don't want it to skew this number, so it's cleaner when it's not included. I've even seen some businesses with corporation tax down as an expense, and that's not an expense. Obviously, you've had to pay it out, but you're paying it because you've made a profit. You're paying it based on this number at the bottom. Okay, so now let's do that zooming out I talked about. So let's go to the 1st of February. So we're going to look at the quarter now. So we're going to look at the quarter. So you can see April, I think we made, was it £11,000-12,000 profit, but we've only made an extra. I say only, it's still a nice profit, but relative to this business, we've made less than that amount for the other 2 months. So for February and March, we've only made an extra 7, but we made about 11 or so, 12 in April. So April was clearly a very profitable month. So we can kind of zoom out and we can look at our percentages here. It's not quite a third, so it's about 30% ish. And by the way, some people get stuck up on the specific number and the details and the pence. Unless you're doing costing, unless you're doing something, scaling in a corporate business, something that's largely true makes sense. It's far more important to understand your numbers than drilling into the pennies. And it does depend on your nature. So when I say around 30%, some people might be, I need to check that number. I need to get a calculator out. That's fine. But the actual number exactly doesn't matter. It's the story. Is it going up? Is it going down? But we will look at those numbers in a second. There is a time and place to get specific. Okay, so we can see a bit more. So what I'm going to do now is I'm going to run April again. And I tend to do this live with people I work with one-to-one because it's more valuable to do it with you because you'll understand the process, you understand the numbers, rather than send you a report. And there is a time and place for a report. There are people, we are looking to send people more reports because something is better than nothing. And if you're not used to having a report to look at, it's going to trigger questions, which is the starting point of everything. However, ideally, you would be having a conversation with someone, with us or with someone inside your business who can help you understand those numbers. So if we go back let's go back for the last 2 months. Okay, so now we know that February and March is not quite as good, but now we can drill into that. So March actually had a very good. I would normally start myself at the top and I'll work down to the bottom. So we can now look at 3 months in a row. So we can see sales are going up. March took a very big jump from February. And if we look at the gross profit is going up, which is nice. It's going up, in real life, because this is a demo company, it's probably unlikely going to see that sort of growth in a very short period of time. But actually, over a longer period of time, that's definitely what we want. It's not impossible. This business could have changed their model, and we are going to treat it like a real business, and we're going to ask those questions. So something's changed in this business, and we'll try and get that picture in a second. So the advertising, you can see they've got a big chunk of advertising in March. From an accounting perspective, when you see something that's really big and it stands out, one of the questions we need to ask is that payment all to do with March, or is it actually something for the future? So it might be that actually, there was a £6,000 extra payment because it was 3 the month before, and that £6,000 is really for the whole year. It might be that you're in a directory or a trade magazine, or you've got a subscription. So actually, really, it's £500 a month, but you've paid £6,000 in one go potentially. If that's the case, what we would do with people is we would smooth that, and we would take out the £6,000 and we would spread it over several months, over 12 months, because it paints a true picture. Somebody I was working with recently, one-to-one on with Profit First, he received you might even be watching this, I'm not going to mention any names. He received a £13,000 payment in his account from a customer, but it represented a year's worth of income. So it looked like he had a very good month. So I took that out and I spread it across, and we get a far more realistic picture of what's going on in business. And I also had somebody else who again might be watching this, who had, I think it's around £40,000, which was a year's worth of income. We spread it because it just really skews those numbers. So there might be a little bit going on from an expense perspective, the same principle they might be paying for the year. So that's, again, we've got a question, which is great. And we've got some questions here in terms of what's changed. So if we were having a chat with a business owner, or again, if you're looking at these numbers yourself, why has your numbers gone up? Why has your revenue gone up? Because actually, we probably want a bit more of that. If you can do more of that, that's what we want to keep on doing. Have you introduced a new service? Have you increased your prices? Have you just got one big customer, or actually, is there a chunk of money that's come in and it's for the next 6 months, it's for the next 3 months, it's not all to do with March? It's all about creating those questions and understanding your numbers. And when it comes to sales, by the way, our P&L, so our profit and loss, we call it P&L, it don't just say sales, it's got about 15 different accounts for sales. And I would invite everyone to get a bit more granular with your sales. Not all income is the same. You know, we split it between our accounts income, our tax return income, our bookkeeping income, our VAT income, our recharging the zero fees and software, Profit First coaching, management accounts. We separate all of those things so we can see actually what's going up, what's going down. Because when you look at it as a big chunk like this, it's not very useful. So depending on what type of business you are, if you're a fast food business, if your sales are going up, what are the products that are pushing it up? Are you selling more cookies? Are you selling more hot drinks? Are you getting people to supersize their meal? Are they supersizing, the large fries? So it's drilling into the sales. If you're a professional services business, what's changed? Whatever your business is, it's trying to understand. So you can do a lot of digging just by that jump in sales. It's not just looking at numbers and accepting numbers. It's asking why. What does it mean? What's happened? Do I need to do more of that? Sometimes if it's going the wrong way, it encourages us to challenge and to nip it in the bud before it becomes a problem. Because sometimes people get into problem with their cash, they get into problem with their VAT, because actually their numbers plan that wasn't working from the beginning. And this is a good place to kind of identify that. Okay, so you can see actually the profit's gone up again very sharply. So really April's a very good month. March is okay, and February was not great, but we still don't know, looking at these 3 months, what normal is. If you were looking at this business, you wouldn't know what normal is. So think of your own business. The 3 months only paint a certain picture. So what we want to do now is actually, we probably want to go out a bit further, and let's see, it is a demo company, but let's see how far we can go back. So let's try and go back to 11 months, which would give us a year. I have tried to populate some of the, so I did do a bit of work before this to populate this data so I can create this sort of video so we can sort of analyze what's going on. Okay, so just going to zoom to the right. So, okay, we've got a year now. So we've got May all the way to April. So we've got so we've got a far more interesting, insightful perspective on the business now. So you can see the sales is the same for a lot of these months. I had to pre-populate some data. Actually, that could still be a realistic scenario because some businesses have regular retainers. You could have several customers that pay you a certain amount every month. But obviously, I wanted to get the data in, so we've got something to work with. And one of the interesting things in this particular business, straight away, I'd start with the sales, then I'd go to the gross profit. Okay. So you can see the gross profit is only 3,800 in real numbers, but as a percentage, again, it's 25, 30%. Here, it's way higher as a percentage. So something is correct, is massively changed with these numbers. So I don't want to lose people on spreadsheets, but what I'm going to do is I'm going to drill in a little bit and I'm going to export this to a Google Sheet. And this is how easy we can do this on Xero. And we can just kind of poke the numbers and mess around with them to get a little bit more data. So we've got exactly the same numbers on a spreadsheet, and most people are probably familiar with a spreadsheet. You're probably more comfortable with a spreadsheet than you are Xero, I guess. So, okay, so we're going to do your gross profit, which is basically, again, your sales minus your cost of sales, including any salaries if they deliver the service or product. So you're just going to divide your gross profit by your total sales, and that give us a gross profit percentage. And now I'm going to turn that into percentage. I'm just going to highlight this to make it a little bit easier for you guys to see. Okay, so we've got, hopefully you can see that. It's probably a bit small, but we've got 76%. So let's go back. So rather than trying to understand those numbers as specific numbers, I can look at percentages now. And this paints a very powerful picture because we can see the gross profit percentage was 30.74%. So again, around that 30%, 30, 30, 30, 30. We had a random month, we went up to 35. Again, we had another one, 34. That's fine, bit of smoothing. However, something changed massively in January 24. So, as I said, it's unlikely to come out the blue, a massive change like this, but we're going to play devil's advocate and analyze this business. What I want to do is show you how to think about your numbers, how to drill into your numbers, the thought process, because we're trying to understand the story. So we can see it went up here and the actual number went up to 8,000. So let's just look at this. So we've got sales. So the sales didn't actually go up too much in January. It went from 13 to 14. However, as you can see, we've got consulting from May to December. So I'm just going to highlight that with a color. Let's just make that grey. We got consulting from May to December, and it was £8,000 a month. In January, and by the way, we had no direct salaries. So from May to December, there was no direct salaries. Okay. So in January, the business clearly shifted. There's been a model changed, and that could have been intentional. That could have been led by drilling into these numbers for the last few months and questioning, is this making the money it needs to make? Are we doing things correctly? Is this the right business plan? So there could have been a lot of planning and thinking and strategic sort of analyzing. Because when it got to January here, I'm just going to see if I can draw a line on there. There we go. So when it got to January, the business changed for the better. So they've probably changed the model. So they stopped paying the consultant. So, obviously, when I say understand the story in your business, if I'm going through this with someone, I'm asking the questions. And actually, the power of questions is amazing. If you ask the right questions, you can get the right answers. If you don't ask the right questions, it's not normally trying to find all the answers, it's trying to find the right questions. And most people are not asking the right questions in their business. So I'm having that two-way, and we're getting to the bottom of the story of what's happened. And more than likely, if this was somebody I was working with, we've been talking about this for the last few months. We've been talking about the model. We've been saying, actually, this isn't good enough maybe for your industry. What can we do differently? So there's probably been a lot of plotting and planning, and then all of a sudden in January, all the seeds, we're reaping all the rewards of those changes because we've got rid of the consultant and we've got in-house staff. And not only have we got in-house staff because we've got direct salaries, no consultants, we've increased our sales only a little bit, but we've actually increased our sales, which is really good. And we're going to assume the owner is doing the same work they did before. However, sometimes you've got to, take a deeper dive and not just look at the numbers. The chances are, moving forward, the owner's probably going to have a better balance to their own job because they've now got, let's say, a full-time employee in their business, not just a consultant who works when they want. And there is a time and place for consultants, and it can be a very good arrangement. It can be a very good win-win for everyone. The company the person doing the work and the customer. There's a lot of knowledge transfer and everything. But however, having someone full time, there are benefits to that because the owner can probably delegate more things. So not only are they making more money, they've probably got a bit more time freedom in their business actually from January onwards. January, they're probably training and investing. So I imagine that would be part of the story. Then if we look at February, again, it's quite a nice gradual increase. It's not it's fairly big, but in the scheme of things, it's not huge. But but yeah, so it's gone up £3,000, so about 25% in 2 months. But it looks quite gradual. It looks quite achievable. They got the same direct salary, so you would imagine what's happened here in this particular business. The new team member is kicking in. They're getting bedded in, and they're starting to get a bit of a ROI on that new team member, and it's helping get more work out the door. Or it might be that the owner is delegating some of the stuff that is not the best use of their time, so they can move on to higher level projects, and it's increasing their revenue. And that's how I would paint this picture for April and March. Is the owner has probably delegated the lower level work and really freed themselves up because they've got this employee in the business to take on bigger projects, work with maybe bigger customers, or just be more productive in general. And it also might have been that the owner was putting a lot of hard work in earlier on in the business, and doing a lot of networking and all that sort of stuff, because let's assume this business started at the beginning of this year. So I think that would be an interesting story. But as I said, I wouldn't be making this up. I just want to show you how the numbers create a story for what's going on. I certainly won't be making this up. It'd be a two-way conversation. If you're looking at your own business, at the very minimum, look at the numbers, get a journal out. I'm a big fan of Remarkable because it's all there digitally. It's basically a digital pad. You can do it on an iPad, but Remarkable, there's no distractions. But pen and paper, keep it simple, and just jot down, what do you think? What are the questions that come to your mind when you see your numbers? If those questions are, I don't understand certain things, that's fine. If you're looking at numbers for the first time, not used to it, I don't get the difference between sales, revenue, I still don't get cost of sales, I still don't get gross profit, write that down, because your questions will change over time, and your questions will move to more strategic, business, commercial type questions in terms of what's going on. Okay, so I thought I would struggle to talk about the P&L for this amount of time, and I really just focused on the gross profit. So you can see how important this top part of the equation is. But I'm not going to drag this out much longer. I wanted to keep it around the 40-minute mark, but hopefully this is really insightful, and I can do another deep dive into P&L in the future. I mean, your overheads, is a big part of this as well. What's going on with your overheads? Are they going up? Are they going down? With Profit First, we help people review their expenses every 3 months. And one of the things we look at is this expense a must? Is it essential to our business? Is it a nice to have, or actually do we not need it? You could argue there is a fourth, and the fourth is this an investment that I think is going to give me a positive ROI on my business? Because there's some things you're going to invest in that on the face of it are going to negatively impact your profit and your cash, but you're hoping for a return. Advertising is clearly one of those. Working with someone to help improve your business, a consultant, people we work with, it's an extra cost at the beginning with the Profit First side, but we're looking to increase their numbers. So just challenge the expenses on your P&L. That would be my sort of takeaway for that. So what I'm going to do is just have a quick look at the net profit percentage, and then we'll wrap up for this session today. So if we get the percentages for net profit. So how I've got this number is I've simply said, what is the bottom line profit? What's the profit right at the bottom? Divide it by the sales at the top. And what is that percentage? That is what we call a net profit percentage. So you can see it was around 20%. And to be fair, that's not necessarily a problem. You might be asking yourself, you can see it here, 20% in May, and then it carries on at the bottom. You might be asking yourself, what is a healthy net profit percentage for your business? Very good question. It really depends. What I would say is it depends on your industry. And it also depends on the size of your business. The bigger you get, the more likely your net profit percentage is going to be a bit lower because you're going to have more team members doing things. So the more the owner does, the more hands-on you are as the owner, and the smaller your team is, the bigger your net profit should be most of the time, because it's a bit more like a self-employment. You're doing a lot of the work yourself. However, over time, that might change if you've got more team members. But it's the same principle. Your gross profit, we want that number to go up. So what we would do is we'd benchmark it against other people in your industry. We'd also pay attention to your numbers. I worked with a coffee shop. I still work with a coffee shop owner. Just want to go back to this zero. I still work with a coffee shop owner. And actually, in the first year of working together with Profit First, her numbers took a slight downturn. And on the face of it, you'd say, that's not good. This is not working. But actually, what happened was she took herself out of the business. So she was no longer an employee in her business, making the coffee, serving the coffee. So she completely took herself out, and she had to pay someone to do the work she was doing. So after 18 months, she's now earning more money than she did at the beginning, but she's no longer working in her business. So you've got to take into account those sort of things when you're looking at your net profit. Hopefully that's useful, guys. These are the sort of things we're sharing in the Profit First Club. I will do refreshers on Profit First itself. There are some old videos on that. If you've got any questions or you want to chat with me, feel free to reach out. If you want to know how it works in terms of the one-to-one stuff we do, feel free to reach out. More than happy to have a chat. Thanks.